back, and gives me immense pleasure to welcome Swarup again on Kuvera Insights. Swarup has been a big supporter of the industry, of the growth in direct plans and in platforms like us. Welcome Swarup again to Kuvera Insights. To just give a quick background to Swarup again, he is the CEO of Mirae Asset Global Investments. He has over 24 years of experience in the field of financial services, including 17 years experience in management and sales. He's overall responsible for the India AMC and has been associated with Mirae as the head of sales since July 2011. Welcome, Swarup. And everyone, Mirae is a popular fund house on our platform. Everyone knows that you guys have had a very good journey in the past few years. So coming to the fund, right? Coming to the Fan Plus fund. Tell us a bit more about it, because I find it very, very interesting. And I'll tell you my reasons for that, right? So two big reasons. One is that it's a very, very differentiated product. In some sense, it kind of reminds me of the ARK funds, ARKK, a very popular ETF globally. That style of investing where you're taking concentrated bets. The fund manager comes in, takes very concentrated bets on a select group of companies based on a very strong thesis. So 10 companies in this case, right? And also this whole idea that they are equal weight. So you are kind of bringing in some aspect of smart beta into this mix. So how did that whole product development happen? And what do you want to add to this?
Gaurav, thank you for that question, because at the end of the day, when you bring products to the market, our endeavor, this is not just Mirae Asset India, but global, is to feature in a differentiated sort of space where you add some value to the investor. Now, there are the beta products in the market, but the beauty of smart beta products is it takes into consideration some of the rules or factors that you would take in active fund management, inculcate that in a passive space, and give a product which would attempt to at least outperform the beta market or give something more. And that is exactly what we've done in this product, the Fang Plus. The excitement about it is twofold, as you rightly said. First is the structure of the product, which itself is very differentiated and
very differentiated. I mean,
I have been
great that SEBI also is now allowing such funds.
There was absolutely no issues. I'm telling you, in fact, the FOF approval came in 20 days time.
Great.
These are, you can track them when we filed for the FOF and when we had. It's just that is how quick the regulator is now, right? And then, as you rightly said, this is a 10-stock portfolio. So typically, from a regulator's perspective, this is at a different risk spectrum. There is no denying that. It is a concentrated portfolio. There is no denying that these 10 stocks, from a concentrated portfolio perspective, is actually above the focus fund that we have on the active side, which allows 30 stocks. Right. So this is far more concentrated than that. That is point number one. But the constituents of the 10 stocks that you have are stocks which you even want to avoid in your life sitting in India, you cannot. Let me tell you, I used to take pride that, I have never been on Facebook, so I can lead my life without Facebook. I used to always talk about it. Right. And see, it doesn't matter to me what Facebook, but till they bought WhatsApp. Right now, my life is you and I communicate on WhatsApp, right? Yeah. So I cannot avoid that, right? Yeah. Today, if you say, okay, fine, Tesla. I mean, the world going forward is an electric car market, right? It's not just Greta Thunberg who's talking about the climate. All of us have realized the importance of climate, and slowly but surely, there is an ESG part which is taking over that part also.
Does this one also have an ESG overlay? Because
No, it doesn't. That there is so much talk about, and Tesla, to be fair to itself, is no longer just a car company. Yes. It is trying to come to India through another route and not the car first, is what I'm told, though I do not know the actual this thing. But the point I'm making is, when you look at the evolution of these 10 companies, they are the master disruptors, and the amount of money they invest in themselves for their R&D keeps them ahead of the curve of the world. I mean, you might say that actually they keep the world behind them at all perpetual time. I mean, there was a very interesting article I had read long time back on Apple that it's very dangerous because the product always borders on the, on the borderline of science fiction and reality. How long will that happen? But it's been happening. But today, Apple as a company is just beyond. It started as a computer company. Now it's gone beyond just a phone company. I got out of iOS, but I cannot get out of Apple Music.
Right? Yeah, they have enough hooks.
So then come the 10 stocks, which is very important. important. All the 10 stocks are fantastic companies and continuously reinventing themselves, very futuristic in nature. The third most important part is it is rule-based. It is 10 stocks equal weighted, 10% per stock.
Are the stocks also being selected through rules, or is a fund manager?
No, that is the basic filter which has happened. After that, these stocks have come.
They will never change.
Yes, Gaurav, at this moment, the 10 stocks are what they stand. But at any point of time in the future, if any of the stock loses the basic characteristics that fulfill formation of the index, they can be changed.
And that's how the ETF will get constructed.
Correct.
The index will get constructed and the ETF will get constructed.
Yes. And the beauty of this, since it is being rule-based, it will get averaged at every quarter. That means, in your words, let me take that from you, Gaurav, it reverses to mean every quarter, and that's the beauty. The power of an equal weight index, and I would really request all the viewers to read up if possible, or ask Gaurav this question and his team's question, that what is the power of equal weight index? It is the simplicity of this is the power. And the fact that it will ruthlessly go and rebalance it every quarter and not rely on any one intervention is what makes it so powerful in the long run.
Totally. And I mean, we have been very strong proponents of equal weight index. It's one of the simplest smart beta products you can have. And even in the India experience, right? If you look at Nifty equal weight index, and if you look at Nifty 50, the Nifty 50 equal weight index outperforms Nifty 50. And to Sarup's point, what happens is the companies that outperform, you sell them, and the companies that underperform, you buy them. So in a way, you're playing that reversion to mean trade all the time. You're buying low, selling high. And because you're doing it in a tax-free structure, because that is also very important. If you think that you can do it yourself, lots of tax outflows. But if you do it in a tax advantage structure, which is a mutual fund structure, then what happens is that all those gains from rebalancing accrues to the NAV. Which is why I mean, we have been a strong proponent of equal. I actually genuinely believe that it's one of the most simplest smart beta products, and that more of them should be available to users. Yes. I think right now India has like 2 equal weight indices.
Yeah, but you know, when on the active side, I realized this when we did the hybrid fund, we rebalance it every year. And the alpha we have generated just because of rebalancing is a pretty telling amount. And so whenever we discuss financial planning, and all of us do that, review is not the bigger part of your plan. The rebalance or the ruthless rebalance is actually which creates the wealth in the long run.
This goes back to the asset allocation discussion that we had, right?
Correct,
so
exactly.
Basically, if you have a 60-40 asset allocation, and at the end of every year, you go back to 60-40.
Yep. And then the power of that over a period of time is unbelievable, actually.
Because equal weight is exactly the same. You're basically saying I have a portfolio which has 10% allocation. After every 3 months, I rebalance to the same 10% allocation. It's an asset allocation play itself, and like asset allocation works, equal weight also works, right? So 100% agreed. I think goal planning is another way of doing the same thing. When you're doing goal planning, your advisor will say you should have 80% equities, 20% debt.
Yeah.
Next year, your advisor will be like, oh, now your equity has become 90%, so you have to sell some equity and buy some debt and go back to 80-20. So goal planning is another way of kind of making that asset allocation story more real. But at the end of the day, it's the simplest, most powerful tool, and it works. And it works in every market. I think.
Yes.
I don't think I've looked at any market globally where an equal weight portfolio does not perform a market weight portfolio.
Yeah. So, like I said, these ideas have come, and it's just a matter of time that the virtues of rebalancing will figure well and will make us better investors. And then the only thing is, though, at times we realize that I should be rebalancing, but the markets might keep us away from rebalancing because the market will continue to perform a little. But when it is on the ETF side or it is rule-based, it does not wait for that. It just implements it ruthlessly, and that is the power.
So just a forward-looking question now. Like if you put on your thinking hat and 10 years down the line, how easy will it become for Indian investors to buy more global markets? See, right now what happens is there is availability of global markets, but a very few global markets are available. Same thing, currencies are almost impossible. Currency exposure, commodity exposure is really, really hard outside of gold. So how do you think that changing, and how are you guys thinking about it within Mirae?
Gaurav, see, if you just go back a year or maybe a year and a half back, when you started your business at Kuvera. And what you brought to the table was ease of business or ease of transaction, right? Apart from the advice, one of the biggest attraction that online platforms like you bring is the ease of time. I've opened my account with you, and I know how easy it is to open an account, right?
Thanks so much. Yes.
In just 1 year's time, right? And then see, the market, the business flows where the money is. The rest of the business sort of rallies to put everything in place so that the investors find an easy path. Who would have thought that in India today, and please understand, the entire active business has been based on the flawed concept that it should be physical in nature because opening a demat is a cumbersome. Today you open a demat account on your fingertips, right? So if something which is, say, a demat account which does involve a KYC and everything at the back end is automated and takes some minutes to open, this is just a matter of time that this will open up globally. And then barring the cost, I cannot comment on the cost because those are other factors which come into the play, which I also think we'll see.
Cost is always high to begin with, but then in financial services, the only thing that trends down is margin.
Yes, when the economies goes up, the cost also. Yes, absolutely. The margins are always under pressure, but the volume sort of will compensate for that.
Exactly.
As the penetration goes, see what you all have done to the mutual fund industry in the last 1 year when the country is shut down. The industry has not suffered. Today we are talking about an SIP book of 9,000 odd crore per month, and a recent report said that the direct SIP is actually number one, where I keep on telling people this is not direct, this is online distribution at its full flow, showing off its might or beginning to show its might in the country, right? So as the digitalization grows, we feel the more innovation of such products will come, which will encourage more and more investors to become more and more plan-based, and whatever the plan will suggest, they will start buying rather than looking at what is the best fund, which is what been the sort of history till now. And we see it happening quicker than we can even fathom.
See, probably true, because my personal belief is that investing is a it's proportional to wealth. As the country becomes richer,
correct,
as our average GDP, as our dispensable income, because it's simple things, right? You have to first cover your needs, then you get to savings, emergency savings, then you invest.
Correct.
So I think as the country gets richer, more and more people will invest, and I personally 100% agree. I mean, we get so many questions. When can we buy a a commodity basket which has palladium and gold and silver, or when can we buy a MSCI World Index equivalent, right? So there's a lot of demand from our user base that keeps coming, but it's still sporadic. It's still not. I would not say that it's large enough where you do a market survey and you say like, yeah, this product we have to launch. But I think we'll get there.
You need more products at the back end also, which I think the AMC industry will cater to very quickly.
That we have seen. I think with international investing, if you think about it, 2 years ago, hardly anyone was talking about it. There were probably 2 or 3 funds. I think we started recommending it 2017, and I think that we had just 2 funds to choose from, or 3 funds to choose from, literally. From there, the kind of differentiated funds that have been launched, the kind of choices that the user has. Now, of course, someone can come in and say that, oh, choices also confuse people. But I mean, you can't have it both ways. You can't say that I want global exposure, I want exposure to a lot of the different asset classes and a lot of different, and also say that I don't want choice. I just want one fund to do it all. I mean, it's possible, but it's very hard, and most people will not gravitate towards it.
Absolutely. I agree with you. Totally. So how do you see, and what would be your sort of advice to asset managers on the global space, if I can ask, Gaurav?
See, I think in the global space where we see the most demand is simple. Is there a simplistic way? And this problem hasn't been solved in the US also, by the way. But a lot of people are looking at simplistic ways of owning crypto, simplistic ways of getting real assets exposure, right? Commodity exposure. Because I think people are realizing, okay, you know what? I have stocks. I know international stocks is going to help me. It's a marginal benefit, but it's not truly a different asset class in that sense. We had one read, but then I'm not sure whether something like that will happen or not, or will that continue or not, right? International, there is a lot of demand right now for a lot of different reasons. Those stock markets have done fantastically well. These are companies, like you rightly said, everyone knows them, everyone uses them, right? I mean, when you think about a few of the Chinese names, they sound foreign because you don't know of them, you don't know what they do.
Correct.
Most of these American companies, you know them, they're familiar to you. So people are looking for kind of differentiated product offerings in that space. So I think when I think about kind of market survey in this sense, I always find that mutual fund companies are actually a couple of steps ahead of us. And that's a good thing, because as soon as the questions start coming, we already start hearing that the product is almost ready to launch.
Right.
So whatever marketing and whatever surveys you guys are doing, it's working.
No, that's what we thought. Let's put 10 companies which you cannot avoid. Let's put 10 companies which we feel are pretty long term and in nature. These are companies which are always ahead of their times, and sometimes you talk about owning stocks, or the risk of owning some certain stocks and the risk of not owning those some stocks. These are 10 stocks where not owning them, the risk is certainly higher, is our view.
No, fair enough. And I think it's a really good addition, and that's the whole point, right? I mean, and it should probably get other creative juices flowing in ways and different ways of getting value to the end user, because that's at the end of the day, right? I mean, if you can show that, and that's what works, whether it be international, whether it be in India, right? So perfect, Swarup. Thanks again. Always fantastic speaking with you. Always learn a lot. Thanks for joining us at Kuvera Insights.
Thank you so much for having me, Gaurav. Looking forward to meeting you. It's been a year of you being in Singapore now. Wish this opens up and we meet soon. Thank you so much.
Sure. I think hopefully.